I really appreciate the fact that you guys can hear me very well and welcome to the class so far. I won't be wasting much of our time because we spent some of the time somewhere trying to figure out some things right. All right, so without wasting much of our time, let me just share my screen. Tonight's topic is graduating in our trading journey, yeah, basically. And where are we graduating to? We're actually graduating to the point where we we need to enter the real world of trading itself, what it is that we are doing. So if you are in this class tonight, make sure you have your MetaTrader 4 or MetaTrader 5 opened because it's going to be practical as possible. Like, we are going to make it looks really practical. Do you guys understand that right now? So basically, to let's move straight to the order of the day and basically all right. Let's move to the order of the day. And basically, what we have is I believe you can all see my screen, right? Or meet yourself and let me know.
Sir.
Can we all see my screen? Yeah?
Yes, sir.
Yes,
All
sir.
right. So
Yes, sir.
moving straight to the next thing. The topic before us today is what types of market orders and what are market orders? Market orders are actually the instructions we give to the market based on our own understanding and what we want the market to do for us as at that current period. Do you understand that right now, guys? So basically, if we are talking about market orders, it actually implies and it means that okay, GBP USD, this is what I want you to do for me. XA USD, this is what I want you to do for me, and the likes, AUDJPY, and so on and so forth. Do you get that? So basically, the topic is types of market order, and we can have a subtopic to be what? An introduction to what? Trading execution strategies. Trading execution is actually the actions we take while in our trade in the process of trading. For example, you want to enter for Euro USD buy. You are not yet a trader, you are not yet trading. If and only if you are only looking at the charts, you are not making attempts. You are not making, you are not giving the market an instruction to do on your behalf. So back in the days, what they do then happens to be okay. If probably you are looking at longing Euro USD, then you pick up your phone, you put a call through to what? To your broker. And what they do is, hello, please, I want to place an order around 1.06350 Euro USD. My stop loss should be this, and I'm logging this for so days. In as much as the trade is still running and is trying its best to hit that point. Oh, you haven't been accepted. All right. I'm sorry. I've accepted virtually everyone right now instead. So, as I was actually saying, you are not yet a trader if and only if you are finding it difficult, right? You are finding it difficult to probably place an order. You are not yet a trader if you are not clicking the action button. And the action button on your MetaTrader 4 and MetaTrader 5 actually means that button whereby you are seeing a buy or a sell. Do you get that? So the moment you click on it, then you are now a trader. But the moment you are still contemplating, you are not yet a trader. I can have my trading view open and not taking any actions. That does not mean I'm a trader already. But the moment I start giving the market what to do for me, all right, I'm longing Euro USD and I click on the buy icon, then that means I'm truly interested in buying Euro USD at that current moment. So now straight to business, the order of the day, introduction. So right, what do we mean by what? A market order. It is actually an order or instruction you give to the market to execute a trade for you at the current market price or at a particular market price or immediately. So what market order does for you is it's actually the key to understanding how to enter or exit a particular trade efficiently. So now you actually want to buy GBP USD. You must know the kind of market order. All right. Am I interested in buying at current market price, or I want to set a limit order, or I want to set a stop order? All right. So take for instance what I have on my screen here. I have AUDJPY. And what AUDJPY asks for in stock for me is the fact that I wanted to buy AUDJPY somewhere around here. Now let's now imagine that the market down here already at my entry point. So the kind of market order I will be doing is instant market execution. As you can see, if you open your MetaTrader 4 application, click on your quote aspect or you click on your trade aspect. Once you click on your trade aspect, you see a plus sign at the top right corner. Once you click on the plus sign, it will bring something more like the symbol at the top, XAUSD in my own case here. And if you are not having XAUSD there, you should, my screen is not clear. Just try and zoom in, zoom your screen. Then I'm using a system. If you're using a phone to view, then it might be kind of small. Zoom it. Yeah. There's nothing I can do to that, please. All right. So once you click on, you will see market execution next to it. Once you click on that market execution, you will see what we have as, you will see market execution, you see buy limit, you see sell limit, you see buy stop and sell stop. For example, you have this kind of interface. After you click on trade or you long press on any either of all these pairs, right? Then what you have next is it will bring trade chart details and cancel. Now click on trade. Once it's you click on trade, it will bring something here. The next, what's it called? The next slide here. So now, if you try as much as possible, can you see GBP USD at the top? In my own case, I have GBP USD there. Your own, you might have something else. If you are not having what you want, you're not seeing my screen. All right, stop presenting. All right. Please call my attention to anything if you need something, but please don't stress me. I beg. I beg, I dey beg. Make na no stress me, I beg. All right, but make sure you call my attention to anything if you are not seeing my screen. I've reshared my screen, so you should. I believe everybody should be seeing my screen right now. So I said the entire market now. All right, you. I started from somewhere around there. The moment you open your MetaTrader 4 or MetaTrader 5 application, you have this interface. This first one has my interface, right? You have the likes of XAUSD, GPUSD, Euro USD, and the likes. You can have more than this. You can have way more than this. You can have some other pairs other than all these. Now, what you now do is after there are two ways in which you can place a trade. Is either you click on the trade icon that is below immediately the third next to quotes just below your MetaTrader 4 or MetaTrader 5 interface. If you click on the trade, if you click on trade, it will bring your account balance, your equity, and everything. Now look at the top. You will see a plus sign at the top right corner. What that plus sign implies is if you click on the plus sign, it will bring you an interface that looks more like this. This first. All right. A picture. All right. It will bring something more like this. In this, my first image. Once it brings something like this, now try as much as possible to click what market execution. Once you click on that market execution, now it will now bring various options for you. You have market execution, you have buy limit, you have sell limit, you have buy stop, and you have sell stop. Now, once this is what is going to bring for you, can you see? Now, it now depends on the type of execution that you have and that you want to make. All right. So now let's now move straight to introduction of market orders. As I was actually saying, market order is actually the what? Is actually an instruction you give to execute a trade immediately at current market price or at a particular market price that you have in mind. So market order means, all right, once the market is moving, you already know what you want to do. So now, if it reaches, is either maybe you have the luxury of time. Then you wait, you keep on staring at your what? At the market till you are able to picture that okay, the market is currently at your entry point. Then what you will do is you click on either buy or sell immediately. Now, what I've just explained right now is what? Instant market execution. What instant market execution means is once the market is currently at your entry point, at the price you have in mind to either buy or sell, you enter instantly for a buy or a sell. Do you get that now? Please unmute yourself and let me know you guys are following me. I can't just
Yes,
come.
sir.
All right, thank you.
Yes,
Now,
sir.
Yes, we are following.
when do you, when do you use instant market execution? You use instant market execution number one when the price is currently at your entry points. What did I say, guys? Everyone,
You use instant market execution when the price is currently at your entry point.
that's it. When the market is currently at your entry point, that is the point in which you have in mind either to buy or you sell, then instant market execution is best for you. Now, you enter at the desired price. Immediately you see market there, then you enter one, two, three, depending on how many positions you want to open. Now, best for highly liquid or volatile markets. Now, in the case of forex trading, we have what we refer to as fundamental analysis. Fundamentals at times, not even at times, most of the time affects markets greatly. So in that case, you can choose to use instant market execution provided you are using a very good broker. Do you understand that? Now, what you now tend to do next after during instant market execution is number one, you need to take note of the fact that the market must have been at your entry point. That is the point in which you have in mind to either buy or you sell. That's number one thing to take note of. The market must already be at the point in which you have in mind to either buy or to sell. That's number one thing to note. And number two is before you enter that trade, you must have in mind where you, if at all this market goes wrong, goes against you. This is the point where I have the intention of exiting this trade. That's number two. Number three, before you enter for instant market execution, you must be so sure and you must have in mind where you want to exit that trade. And mind you, note you must not be greedy in any of your approach. If you are greedy, then it might cause something else. But in as much as you are not greedy, then trust me, we are good to go. Do you understand? So you choose your take profit and your stop loss. That is the point in which you want to exit the market if it goes against you, and the point in which you want to exit the market if it goes in your favor. That is, I'm okay with this profit. Market, do whatsoever you want. I'm out of this market. I've made more than enough. That is the point whereby we refer to as either the stop loss region and the take profit region. Do you guys get that now? So now, next on the list, immediately after instant market execution is what? The concept of buy limits. Now, let me go on my chart here and explain some things to yours. Now, instant market execution means I did mean today is not Saturday, that we are during the week. Maybe I want to sell the market somewhere around there. Immediately I see my market here, then you see me open my MetaTrader 5 and I enter for a buy or a sell immediately. Now I want to buy, then I'll enter for a buy. My stop loss will be just immediately below my entry point for a buy, while my take profit will be a price higher than what? My entry point for a buy. But for a sell, note that your take profit must be below your entry point for a sell, while your stop loss must be what? Above your entry point for a sell. It's vice versa for both buy and sell. If you are buying, your take profit will be above your entry point, why your stop loss will be below your entry point. But if you are selling, your stop loss must be above your entry point, while your take profit must be what? Below your entry point. Take note of that clearly, I beg. Please. So now, next on the list is what? Buy limit. Buy limit means number one, it is an order you give to a price to the market that you want to buy a particular asset or a particular market at a price that is lower than the current market price. For example, dollar is currently as 1,600 plus, right? Now, you set a buy limit for naira to dollar if you expect the market to probably reach 1,400. So you can set your buy limit to what? A price around 1,400. That is, once the market reaches 1,400 region, the market should click you in for a buy. Now, when do you use buy limit order? You use it when you expect the price to fall before rising again. That is, you expect the price to, at least this market is going to buy, but before it buy, I'm expecting it to reach this particular point. Then instead, you set a buy limit, that is a price that is low compared to the what? Current market price. Number one. I don't know if you are getting me. Unmute yourself and let me know. Are we following?
We are following, sir.
All
Yes,
right.
sir.
All right. So
Yes, sir.
your buy limit is when price to be you are expecting price to be bullish, but currently the market is selling, that is bearish. So you are expecting that once this market reaches this point, I'm not expecting you to go lower than this, so I'm buying from this point. Now, for example, check my charts. This is AUDJPY chart. I will be setting a buy limit against next week if and only if I'm expecting market that, okay, once this market move down, I'm coming. Okay, I'm expecting this market to create a move like this. Now, immediately I see my market here, I'm not expecting it to go lower. Instead, I'm expecting the market to move up instead. So rather, I will set a buy limit for this price here. So immediately this market opens on Monday, and it's I find the market find itself around this my line, and I've already set it on my MetaTrader 5. What will happen is my broker, even if I'm not on the market, even if I'm not with my phone, even if I'm sleeping currently, the market will do what? My broker will kick me in for a buy. And take note, before you set a buy limit and sell limit, a buy limit, right? You must ensure that you know your stop loss region already and you know your take profit region even before entering the market. So if you are following me, please, can you unmute yourself and ask a question if you have a question before I proceed?
Good evening, sir. Sorry, I'm quite lost actually.
How? Lost where?
Yeah, you were saying something about when the market enters the bullish, what's it called? That's when you buy.
Sorry,
Is that
please move
correct?
closer to your phone. Hello, move
Oh,
closer
okay.
to your
I
phone. I
said
can't
you
really
were
hear you.
saying something along the lines of when the market gets the bullish, that's when you buy. Is
Yes.
that correct?
Yes.
And when it gets the bearish, you sell.
Eh?
When it gets the bearish, you sell. Is that correct?
No, not when it gets. When the market is bearish, you sell. When the market is bullish, you buy.
Okay, okay, okay. I think I
Yeah.
understand now. Thank you.
All right. So your question. Hello.
Oh, so sorry, that was
Hello.
my question. I wanted you to clarify that for me.
All right. So for that to be hey, for that to be very easy and make sense, do you get? A bullish market is a buying market, while a bearish market is a selling market. Do you get? So whenever the market is bullish, you don't want to enter a market that might probably want to put you in trouble, right? So you follow the direction of the market, you follow the trend of the market. That's how you make money. If you are going against the market, then that means you are losing money. Do you get that?
So once the market is bullish, we buy, and when it's bearish, we
Yes.
sell.
And whenever a market is bullish or bearish, you get to know, because it's just it's just a matter of the high. Except someone that will not get high. That's the only person that will not know when the market is bullish or bearish. Now, take for instance, this market. I want you guys to echo it to me. Is this bullish or bearish? This particular market. Look at the market from this region. Let me box it out. From this low to this high. Anybody that gets this wrong will owe me a date. You take me out and you buy me food. All right. So yeah. If you get it wrong, go. But if you get it right, I think the reverse is the case. I'll take you out and buy you food. All right. So yeah. You guys have the floor. Or meet yourself and let me know. Is this a bullish market or a bearish market?
It is a bullish market
Why? How?
because at this particular point where you started, where you highlighted rather, it
Yes.
went down. So you buy at that particular point, and then from there it has been going up.
Wow.
It hasn't
I
gotten
don't
to that
think.
low again.
Okay. Now, I don't think I get that. I don't think you are right. Someone else, please. Is this market bullish or bearish?
Yes.
Why is it bearish? Who is speaking? Let me know. Who just finished speaking now? Sorry, please. Oh, who just finished speaking now?
So this
I
market
Explain.
might just
Who is
get
that?
bearish.
No, sorry. Someone said bullish. Who said bullish? I just want to know so that
I said bullish.
Oluwadamilare Olatilewa, right?
Just Tiwa, yes, I said bullish.
All right, you said bullish. Then I don't think you are right. To me, oh, I don't think so. Others, please. Is this market bullish or bearish?
I think
Someone is talking already now. Someone was actually saying something the other time.
actually it is a bearish market.
All right, why is it bearish? Fitia, Bakari.
So please, can I see the chart again?
Why is it bearish?
Because from it started from a lower point, then to a lower
Mm,
high, then it started moving to an high. So like a
okay,
bearish market like that.
bearish market. All right. Oh yeah. Who else? All right. Without wasting much of our time, let me just explain. This is actually a bullish market. So Tiwa, please send me a DM right now on WhatsApp. Send me a DM. This is a bullish market, right? And what does that mean? What does that imply? It implies that the market started from a particular low, and ever since then, this low, the market has not returned back to this low. So, which means instead of coming back here, it is creating series of higher highs, higher highs, higher highs, higher highs, high that is higher than the previous high. This was the high created initially. Now, this next one is higher than this. This next one here is higher than this, right? This next one is higher than this. Now, the Oga Kwata of them all is this next high, which took out this particular high. Do you get that? All right,
Yes,
please.
sir.
You get,
Yes, sir.
yeah. So you are sending me a DM right now. All right. I was more like explaining
Yes, I
how
can see your screen.
I was explaining the main reason behind this market being a bullish market. Whenever you want to identify a bullish market, see what I drew here. This market, but there's one thing you should take note of. It's possible for you to have a bearish market inside of a bullish market. All you just have to do is be able to track the right market movements. Do you guys get that? Being able to track the market movement, that is the starting point of a particular trend. Can you see that what I do here, this low here happens to be the starting point of this particular trend. So all what has happened previously, you are just using them as what? Point of reference. For example, my first TP might be somewhere around there, or this next high, or even this high. Now, remember, what I put here should be a previous high if I trace it very well. So, as I've said earlier, that all you have to do is you need to take note of what previous happenings on the forex market. That is what you build your what your current interest on. You don't just say I want to buy or sell. No, you are buying or selling. How? Why are you buying? Why are you selling? So that's just the concept of what buy limit order. So what you should take note of is you set a buy limit when the market is previously currently selling, but you have the interest and you have the belief that once this market reaches this particular point, I'm not expecting it to keep selling. I'm expecting it to buy from this zone. So instead, you just enter for a buy, you set a buy limit. That is, immediately market reaches that point, right? All you have to do is enter for a buy. I've seen your message, please. Sorry. Immediately after the class, I'll respond to that. So that's it. Right? So, what else? What else? What else? What else? What else? What else? That's it. That's it. That's it. Do you have any question on that? Do we?
Sorry, sir. Please, can you explain how you can have a bearish market in a bullish market?
How I can have a bearish market in a bullish market? All right. Let me explain
Yes.
this. Inside this box area, right? You can easily say that this market is actually a bullish market, right? But check here, from this high to this particular low. Let me change the color. What happened? Instead of the market creating an higher high, what happened? The market retraced a little bit downward, right? So that is more like giving us what we can easily call a retracement phase. Do you get that? So a selling market in a buying market implies what we refer to as what? A retracement. It's not possible for you to see a market that it will just do like this. See, maybe start like this and next start going. No. Rather, the market moves in waves. That is, you see something like this, retracement, impulse, retracement, 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 impulse, retracement, impulse, retracement,
Sorry,
impulse.
sir. I can't see your screen.
Try and look at it very well. You should see it now.
It's not showing. It's not showing at all.
My screen is not
Yes.
showing.
Yes, sir.
Yes.
I can see it too.
Sorry, someone is watching movie. Please, can you mute that?
I can see the screen, sir.
Better. All right.
So I can
So
see your
I, s-
screen.
I said it's not possible for market to move, to just start like this and move like this. Though there are times that is very possible. But instead, the most ideal thing is you see a retracement, an impulse, retracement, impulse, retracement, impulse, retracement, 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 then impulse. What does all this thing mean? Is the market will create a leg and will push up with a very big force. Then after, expect a retracement. Then after that, this market will no longer be bullish. Had it been this retracement here took out this low, that is, it closed below this low, then I'll be like, okay, fine, this market is, I'm no longer buying. So we will not have all this. But in as much as this market refused to take out this low, it's still within range, then this is just a retracement leg. Do you get that? Hello?
Yes, sir.
All right. Perfect. 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 That's just an example of that. So I've talked about what? Buy limits. The next on the line now is sell limits. Sell limits is just the opposite of buy limits. And what do we do with sell limits is it's just that the market is currently in a buying market, right? In a bullish run. So you are not expecting that once the market reaches a particular peak, that is a particular resistance point, the market should reverse from buying to selling. So you now set your sell limit to around that point. So once the market reaches there, your broker, irrespective of what you are doing, if you are not even on the chart, your broker will kick you in for a sell. That's sell limits. So when to use it is when you expect the price to rise. When you expect the price to rise before dropping, that is the price is currently buying, but you know that this price should drop, this price should sell. You enter for a sell limit. Now, when you expect a bullish market to turn bearish, that's when you use the sell limits. Do you get that? So a simple analogy is this. Clear. A simple analogy is this. You know the market is currently around here. Yes or no? Hello? The market is somewhere around there. Can you guys still hear me?
Yes, sir.
Yes, sir.
All right. So the market is somewhere around there currently. So you now set a sell limit that, okay, once the market reaches here, oh, I'm not expecting this market to go higher. So instead, you look for a reference point to put your stop loss, then you put it here. Then your take profit for a sell should be below your entry point. Now, take note. Once the market find its way to somewhere around there, your broker will kick you in for a sell. And if the market should sell true, you will be in profit. But if the market should keep on buying, then it will take you out. So that's just it. That is, you are setting a sell limit that the market has not reached here yet. So once you see market here, then it will kick you in for a sell. Then it will keep dropping. That's what I mean. Do you get that? Hello?
Please, sir, can you come again?
Okay. A sell limit is actually an order you use or you choose if the market is not yet at your entry point. Take note of that. Before you set a limit order, the market is not yet there. So you are just waiting for the market to come there. And maybe you have an exam, you don't have the time to sit on what's it called, on the screen for so long. Instead, you set your sell limit and you drop your phone. Once the market reaches there, your what? Your broker will kick you in for a sale. You get that now?
Yes,
Do we
sir.
get that now? All right.
Yes,
As
sir.
simple as ABC. So take note that before you set a limit or even a stop order, the market is not yet at your entry point, but you don't really have the time, right? Maybe you're having an exam and you don't want to miss that trade. You are not sure if you will still be on the market by then or not. So what you just do is set a limit order, either a buy or sell limit, depending on what you want to do. If you want to buy that particular pair, then you set a buy limit. If you want to sell that particular pair, you set a sell limit. Do you get that? But take note, your market has not entered your entry point. But once it enters, you are there or you are not there. Your broker will kick you in for the order you actually placed, either a buy or a sell. Do you get that?
Yes, sir. Please, I
Hello.
have a question.
All right.
Please, when your broker book you in for a buy or a sell, like
Yeah.
what's it called? Is it going to be readily available? Like immediately it books you in, you get whatever it is you want to buy or sell, or you have to wait. And then
Yes.
if by the time you are waiting, if the price is drop or not, If the prices drops, then you are not able to buy again, or I'm not really
All
clear
right.
about that.
Take note of something. You make money from market movement. That is, when the market is moving, that's when you make money. Do you get that?
Yes.
When the market moves, that's when you make money or you lose money. So if your broker should click you in, maybe you are not there, the instruction you give to the broker is what the broker will do. Once you set your sell limit, that is why I said your take profit and your stop loss is very important. If the market should go against you to the point whereby you set as your stop loss, your broker will stop the order. You will not lose more. But if the market should go in your favor, once it reaches the number or the point in which you set for your TP, then it will take you out. Whatsoever happens next is none of your business again. Do you get that?
Yes, sir.
Do you have any other question? Hello? Do you have question?
No.
Excuse me, sir, I want to ask a question. When
Okay.
you are selling or buying, you mentioned that
Yeah.
when you get to the particular point where you put for your broker, when you are not there,
Yes.
that is going to either sell or buy, depending on what you
All
ask it to
right.
do. If
Yeah.
if it passed that particular point, is it still going to either sell or buy, or
The,
that's
the
the end?
first question, how I'm going to answer that question is number one, it will pass that point because it will first reach that point, yes or no?
Yes, it will definitely.
Okay, let's use an OAU student as an example. For example, you are
Okay.
going to SCB from OAU. No,
Okay.
you are going to Senate building from OAU campus gates.
Okay.
Now, and my entry point is banking area.
Okay.
Now, before I reach my take profit, which is Senate building, won't I pass through banking area?
Yes, you will.
Now, so if I don't pass through banking area, what will happen? The market, my broker will do what? Kick me in. Once I reach
Yes.
Senate building, what will happen? My broker will take me out. But what will not
Okay.
happen if maybe as I take enter from campus gate, my stop loss is what? Under that bridge in front of campus gate. Yes. Now,
Yeah.
the moment I reach local government studies, I forgot something and I have to turn back. I drove back to that bridge. Once I reach that bridge, what will the broker do? It will take me out.
Oh, okay. I
Okay,
get
let
it.
me use another example. Let me use another example. From Senate building, you are going to computer, right? Or you are
Okay.
going to pharmacy. You are going to pharmacy from Senate building. Now, do you know that HSLT, Health Sciences Building, Lecture Theatre,
Yeah. Electric.
is before pharmacy, right?
Yes, before
Faculty of
farmers.
Pharmacy. Now,
Yes.
you are going to pharmacy. The pharmacy is your take profit. Senate building is your entry point, right?
Okay.
Is the point in which you want to enter. Motion ground is your stop loss.
Okay.
Now, if you start from Senate building, which is your entry point, if you move and you reach somewhere around that Earth Sciences, you forgot something at Oduduwa Hall. Won't you pass through your entry point again? Senate building.
Um, I will. I'll pass through my entry point
Okay.
again.
You pass through Senate building. Now you pass through motion ground. Mind you, motion ground is your stop loss region. Once you reach this motion ground and you are going to Oduduwa, won't the market take you out?
It will.
Now, think of this that motion ground is your sorry, Senate building is what? Your entry point.
My entry point.
Do you get that? Senate
Yes,
building
sir.
is what? Your entry point. You did not forget anything. Once you reach pharmacy, faculty of pharmacy, what will the market do? Your broker will take you out. You make money.
Oh, okay. I
Yes,
get now.
that's just
Thank
it.
you, sir.
So before the market pass through your entry point, it must get to that entry point first. Yes or no?
Yes, sir.
That's just it. Simple as ABC. Clap for yourself.
Thank you, sir.
Yeah, that's nice. Do you have any other question? Do we have another question, guys? All right. In absence of no of question, let me move straight to this is Big Brother. Buy, stop, order. Now, one thing about this thing is just have to take notes of something. Number one, buy stop is relating to buy limits, or in another way, that is, your market is already buying. Okay, buy stop is actually an order you give to your market. The is actually an order to buy an asset once the price exceeds its current price. Now, you set buy limit if currently dollar is at 1,600 and something, right? You will now set buy limit to trade naira to dollar. The moment you can see dollar above 1,605 or so, if you can set your buy limit that once market reaches 1,700, kick me in for a buy. I'm not expecting the market to come lower again.
Sounding somehow.
How?
I cannot hear you clearly, kind of.
Hello, can you hear me?
Yes, I can hear you now.
All right. So what I mean is buy stop is actually an order you give to the market when you are expecting the market to trade at a price that is higher than the current price. That is, for example, you want to trade US dollar to naira, but you will now set a buy stop when you are expecting the market to reach, currently maybe the market is at 5 naira per dollar. So you can now set your buy stop to, if the market should reach 6 naira, instead of the market is currently at 5 naira, so buy stop will now be valid when you are expecting the market to reach 6 naira and you are not expecting it to go below 6 naira again. You set your buy stop to around that price. Once the market reaches there, if you are with your phone or not, your broker will kick you in for a buy. Simple as ABC. So when do you use a buy stop? You use a buy stop when, for a breakout strategy, that is, your market is currently trading, but you are not so sure if it's going to buy. You will not be like, okay, once I can see the market buying above this point, then I'm going for a buy. But if the market refuses to reach this particular point, then I'm not buying again. Let me go on the live charts and explain better. Please make sure you are getting it though. I won't be going back. That was why I'm making a PowerPoint presentation. Please, because our teachers they try for school. Teaching is not easy. All right. I said a buy stop. Remember, the market is currently here. So I will now set a buy stop at a price. My entry point must be a price that is higher than this price. Market is currently around here. So my buy stop can now be somewhere around higher than this price. That is, once the market now find its way to this point, I'm not expecting it to come lower again. Instead, I can now have something like this and then continue going up. Do you get that? Hello?
Yes, sir.
Do we get it?
Yes, we
Yes,
do.
sir.
Yes. That means you are expecting the price, you are expecting that price to trade higher. But when is it trading higher, you don't know. So that's why you have to be very optimistic and be very, let me borrow the word demure. Yeah. Be very straightforward and be at alert. So you just set your buy stop. That is, once the market comes here, either going right or wrong, your broker will kick you in if you set it. Do you get that? So the same goes to a sell stop too as well. A sell stop is what? An Another to sell an asset once the price falls below a certain point. That is, you know, for a buy stop, the price must go above your current price, right? Now, but for a sell stop, you are expecting the market to trade below. That is, the market is currently around here. So once the market reaches here, you are expecting them to kick you in for a sell, and you write it down all the way down. Do we get that?
Yes, sir.
So do we understand? Or is there any
I
question?
I understand.
All right.
I do
Clap for yourself.
understand.
Clap for yourself if you understand. If you don't understand, please unmute yourself and let me know. That's
I don't
nice.
understand.
You don't understand. Okay.
Yeah.
You don't understand the stop order, right?
Is I understand the
Sorry,
buy
sir.
stop,
So I don't
but the
The
understand the
sell
sales.
question.
stop I don't
Okay.
understand.
What do you say?
Sir, please, do you record this class? Because my own network is bad. So some of all those things, all those conversation, I can't hear clearly.
I tried recording and I'm
Sir,
checking. And I'm checking. I hope it's actually recording true. See, can you see? I have it here. So I hope it is recording.
Excuse me, sir. Please, are you going to be joining this PDF for us too?
What do you say?
This particular PDF you're using, are you going to join it
Yes,
too?
I
Okay.
will.
Thank you.
What else?
Sir, the sell stop.
Sell stop. It's actually an order you give to to market when you are expecting price to trade lower. Do you get that?
Yes, sir.
Yeah. So let me now use a chart example. Your market is currently here and you want to use a sell stop. Reason why we are using a stop order is we are not sure if the market is going in that direction. But I'm so sure that once the market can break a particular point, either a particular low or a particular high, then I should be going in for a buy or a sell. Do we get that?
Yes,
Eh?
sir.
Are you following me?
Yes,
Yes,
sir.
sir. Yes, sir.
All right. So next on the list is a little bit of comparison between of limit and stop order. Now, for a limit order, you aim to buy low or sell high. That is, you want to buy a particular market with a limit, right? What you do is You look, if you are buying, then you are looking for a price lower than the current market price. While if you are setting a sell limit, a price that is higher than the particular and than the current market is preferred. So another comparison is that price is always better than the current market price. Do you get that? So for a stop order, you aim at to enter after a breakout or trend continuation. What does a breakout means? It means that currently the market is here. So if this market can successfully break out above this high, then your buy limit is very good, somewhere around there. Instead, you just set it here. Once market touches here, you are not expecting it to come lower again. Then you go for a buy. That's all. As simple as ABC. So trend continuation means the continuation of that particular trend. If the market is bullish already, then you are expecting the market to continue being bullish without any interruption. You get that?
Yes, sir.
All right. So